Well, good morning, good afternoon, and good evening. I'm Rebecca Ray with the Conference Board, and I have the privilege of leading the U.S. Human Capital Center, and I am absolutely delighted to welcome you to this month's Human Capital Watch. In just a moment, we're going to have an opportunity to discuss some of the critical issues that are facing all of us in human resources at the moment in terms of human capital management and what that means and why it matters. We're going to talk a little bit about how boards are evolving in terms of their role. We've got an opportunity to talk a little bit about how the board can be a natural extension of the management ecosystem and their important role in human capital management. And then we'll also talk about how they can help shape culture. And we'll also talk just a little bit about some of the disclosure guidelines that are coming down from the SEC and other regulatory agencies. But we do have a part 2 to this where we'll spend a lot more time on that particular topic. So without further ado, I am absolutely delighted to welcome you. You can see the kinds of hoops you'll have to go through for continuing education credits here. One of them requires you to sit upright in a chair for the entire hour and click 3 times. So be sure that you do that and enter in your request in the bottom pod. So without further ado, let me welcome my co-moderator, Paul Washington. He serves as the Executive Director for the ESG Center here at the Conference Board. Paul, thank you so much for not only being on this webcast with me today, but also the underlying work that's been a partnership between our 2 roles.
Thanks very much, Rebecca. I'm delighted to be here, and it is my pleasure to introduce one of our panelists this morning, Pat Philly-Cruchel. Welcome, Pat. Pat brings extraordinary experience to this webcast today. From a board perspective, she serves on the compensation committees of the boards of Chipotle and Dollar General, and she's also chair of the comp committee at Dollar General. She's a CEO. She's currently CEO of a firm called COCOL, which is formerly the Center for Talent Innovation, which is a not-for-profit think tank, an advisory services organization that focuses on equipping corporations to design diverse and inclusive workplaces. She also is a experienced business and human resources executive. Among other things, she served as chairman of NBC Universal's News Group. She was president of ABC TV, and she was a senior executive at Time Warner, where I had the pleasure of working with her, full disclosure, everyone, and where she had headed all of the people-related functions, including corporate aviation, which if you think HR is a tricky area, try being in charge of aviation at a media company where everyone likes to have their own plane. Anyway, Pat, delighted to have you.
Paul, thank you so much. Looking forward to it.
Great. We're glad you're with us, Pat. And it's my pleasure to introduce Karen Ganflin. And until just a couple of weeks ago, Karen Ganflin was the Executive Vice President and Chief Human Resources Officer for TD Ameritrade, and as a merger with the Charles Schwab Company came to completion, Karen has now retired. But it's only a few weeks, and so the fact that she said yes to our request to come back and be on this webcast, we're absolutely thrilled. You know, she certainly had end-to-end responsibilities, as many CHROs do from one end of the human capital spectrum to the other. But Karen also was responsible for facilities, for real estate, for corporate executive protection, and physical security and safety, and employee health. And I mean, just if there was something to be done at TD Ameritrade, I think Karen might have been at the helm there. So she continues to be very active on a variety of not-for-profits, including Habitat for Humanity. And I'm also pleased that she is part of our advisory board of the Human Capital Center here at the Conference Board. So we could not have 2 better guests, and thank you very much, Karen, for joining us today.
Thank you so much. I'm glad to be here.
Terrific. Well, let me take just a few moments to share and set the stage here before we tap the wisdom of our guests. This is a part of a working group that Paul has spearheaded, and I've partnered with him on thinking about human capital management in this new era, this brave new world, if you will, where there's going to be more transparency, where the shift from shareholder to stakeholder capitalism is very much at the forefront of many minds. And so this is a report that's coming out at the end of this year, and it's been a real pleasure over the past year to partner with sitting executives, board members, advisory firms, CHROs, and other stakeholders as we think through what this actually means for our profession and for corporations going forward. So when you think about human capital management, just to set the stage, it's really much more than just the people, as important as they certainly are. But it's the policies and the practices that are focused on how a company identifies, develops, deploys, measures the human capabilities of the organization's workforce, all of the intangible assets, and it's their unique competitive advantage as a driver of sustainable value creation. So it's the policies and practices that are focused on how a company brings its workforce along in order to deliver on the business strategy. And when you think about how important it truly is to get human capital right, you can look at how over time the share of value that human capital represents has exploded to a point where so much of a company's success is intricately tied to the value of its human capital. That's the quality of its leadership, that's the quality of the governance from the board, that's the ability of leaders to lead through new markets and through changing business conditions. So that's what we mean when we're talking about human capital management. And Paul, I'd ask you to speak just for a few moments about why it matters and why we should care.
Sure. It matters partly because of the chart you just showed, which indicates that currently human capital is a key intangible asset, and intangible assets represent currently about 90% of the market value of the S&P 500. So think about that. It also matters because we know that human capital performance directly correlates with corporate performance, including stock performance. In fact, even human capital disclosure, the better your disclosure is, can also help drive value. So that's why it matters in a substantive way. It also matters in terms of constituencies. At the conference board, we did a survey of general counsels at 236 companies in June and discovered that the number one topic after liquidity for boards during this pandemic were the employees. So employees are top of mind for boards. Employees are top of mind for investors. We recently had a discussion with investors representing over $12 trillion in assets on what companies should be doing in light of the economic, health, and social crisis in America. And their number one priority was employees. So it's important to boards, important to investors, and then we all know it's important to regulators. The SEC is requiring new disclosure in this area. And of course, it's important to the general public, to your employees themselves, and to your customers who are going to judge your company partly by how well you treat your employees. So for all of those reasons, the substantive and the constituency-based human capital management is critically important, and it's going to stay that way.
Terrific. Well, why don't we start to tap the collective wisdom? And Paul, I'm going to ask if you might start us off.
Sure. Yeah, Pat, it wasn't so long ago that people might have said human capital employees, that's for the CEO to worry about. What do I know? I can help you, I'm on the board. I can help you with finance. I can help you with M&A and some other things. But could you talk a little bit about the evolving role of the board when it comes to human capital, how it's changed over time, and in particular how it's changed this year?
Thanks, Paul. Yes, I can. So I think we need to go back probably to last year, and all of this changed since Me Too. So boards have become much more active with respect to human capital due to the huge value lost at companies where there were issues. Since many of us sit on multiple corporate boards and have weathered all sorts of different crises, it was all hands on deck for the two boards that I sit on when we first faced the pandemic. Yes, you're right, it was about liquidity, but the majority of our time was spent on our employees. We focused on the health and safety of our workers and serving customers safely. Both at Dollar General and Chipotle, we had essential frontline workers. So how are we protecting them? And how are we compensating them for coming to work in serving others and putting themselves in danger? How are we communicating to them? What kind of mental health coverage and medical coverage did we give to those workers that may not even be covered by our medical plans? And then, you look at the corporate offices and how could we accommodate work from home? All of this was discussed at the board level, furloughs, layoffs, and then we reviewed key succession plans for key employees. What if someone got sick? What was the plan? And then we had to deal with touchless customer options. And how did that work for employees and the customers? And then we were hit with the racial reckoning moment. And given my role at Coqual, which is a D&I consulting and think tank, I was very active with our CEOs and CHROs around courageous conversations and accelerating our diversity efforts given the tailwinds that we had. Paul mentioned that on a session with Darren Walker from Ford Foundation that he said that George Floyd's death will probably have more of an impact on corporate America than the pandemic, and I totally agree with that. I think it has changed the entire conversation at corporate America.
Great. Thanks, Pat. Yeah, it sounds like you were doing all the right things, by the way, at your board. That's great to hear. That's what we would have recommended, so not a surprise you're on those boards. Karen, any thoughts that you'd like to toss in on the role of boards when it comes to human capital management?
Yes. I think that, look, at the end of the day, the board's role is to manage risk and protect the shareholder and really ensure that management is executing on the stated business strategy of the organization. And I think in terms of human capital in the workforce, I really see that as an evolving issue, becoming less situational and more strategic, with talent and reputational risk being the two clear themes that I saw. And what I mean about reputational risk is really making sure that your leadership team and your key people are role modeling your core values and the underlying behaviors below those, and really demonstrating those behaviors, which largely speaks to the culture and the tone that you're setting. And then in terms of talent, making sure that you're retaining your top talent, your critical talent, whether those are subject matter experts or key successors. And I think a subset of that is becoming more diverse. I also saw on our board that there was more collaboration taking place. A couple examples, between, let's say, the HR committee and the audit committee, making sure that any issues that came up that were people-related were typically starting to emerge at all three committees, making sure that everybody knows who's going to do what piece of that, and really just more of a focus on the behaviors if something goes wrong, as opposed to just the financial impact. And then certainly, the last few years, when I was on the board, we started having joint meetings between the risk committee and the HR committee, really having the chief risk officer independently certify our incentives to make sure that we weren't taking any undue risk-taking, and that what we were doing was within the stated parameters of the board-approved risk appetite statement. And I actually took that one step further. As part of that, then I also looked at the client-facing groups and said, what kind of disciplinary actions that impacted clients or that we had to report to the regulators did we deal with last year? What was the outcome of that? What was the financial impact? And really as a demonstration to say, we take our values and our culture seriously. And then as Pat already talked about, certainly around COVID, which was more situational, I do think health and safety of the workforce is something that boards are now paying attention to. So, BCP plans are probably going beyond your cyber threat and your active shooter situations. The social unrest, I think, a lot of companies are being pressured to make a public statement in terms of what they believe. Again, that speaks to the cultural element. And then, having been in an M&A situation for the last year, certainly making sure that we hand over a good product to our acquirer by making sure that we've got good people practices and that we retained our top talent.
That's great. And turning it over to Rebecca in a moment, I think what you just said about going from situational to strategic and making it a sustained effort is really important. That the board has, it's not just you, it's not just COVID, it's not just race. this has got to transition into a sort of sustained and strategic approach to human capital. And the boards often have more levers than they even realize, whether it's comp and benefits or succession planning or their compliance programs. They've got a lot of levers when it comes to human capital. And part of the challenge for boards is to pull them all in the same direction, consistent with your strategy, right? So you're not pushing over here and pulling over there. And that involves multiple committees, as you said. So thank you very much. That was really helpful. It's a fascinating area. We could spend all of the rest of the webcast on it, but we won't, Rebecca.
It's okay. So it seems clear to me that the role of the board, let's say the activities or the scope or the things that they're now going to be delving into a bit more, is going to expand. And if they're going to be held accountable for, let's say, having known about a culture that was not a healthy one, that then resulted in business risk or those kinds of things. There's a different level, I think, of involvement that is coming in this brave new world. So the question I would have, and maybe I can start with you, Karen, is the board is going to need perhaps additional areas or levels of information. And so the question, I think, is how do you provide that without overwhelming them or without they're in a deluge of data? And how do you sift through what needs to be shared and how do you bring them along? And many folks may or may not have a level of comfort with some of the intricacies of human capital management. And so where do you start and how do you do that? And I'll ask if you might start us off, Karen.
Yeah, so I mean, I think, it largely depends on judgment of what you think the board needs to know. And it is a tricky balance between getting the board comfortable and not giving them so much detail that they want to run the day-to-day of the company. And so, my advice is to provide the boards or the committees with a high-level summary of what you think they need to know at, let's say, the 30,000-foot level, but you need to be super prepared to answer all of the detail questions. And so I think that's really the balance. And I think in many ways, that's more effective because if you can answer all the detail questions, I think that gives comfort to the board members that you really do know what you're doing and you're just not, reading a bunch of slides that somebody prepared for you. And my three big ones were our annual engagement survey, our joint meeting with the risk committee that I just talked about, and then our annual succession plan, which we did in two pieces. So we engaged the full board on the CEO and the C-suite succession plan, and then we did the below that, really the leadership team, let's say the next top 100, with the HR committee. And again, there's no way you can get an HR committee through 100 people. So I really think that you have to bifurcate that and really spend time getting the committee comfortable with the next level down on your process. Your process, your assessment matrix, some key metrics around diversity, turnover, etc., and really highlighting the people in the 1 and 2 boxes that could be on those C-suite succession lists and getting them comfortable that you have depth of inventory of replacements. So their job is, again, getting more comfortable on the process. We highlighted the people that were in the 1 and 2 boxes. And then what I did in my in-camera sessions on a quarterly basis, I actually did a one-pager with a talent update every quarter, and I had 4 buckets: regrettable turnover, new hires, the people we managed and retired out, and then the promotions. And I ticked and tied, the 9 box ratings to that to really get, the committee comfortable that we were actually working our talent plan and that we knew our people.
Well, thank you, Karen. I guess a little bit later I'm going to talk a little bit about tying all this to business strategy, but I would imagine that was a core part of the conversations as well in terms of having the organizational capability to deliver on the business strategy, which is managed through a lot of the succession processes as well.
Absolutely right.
Thanks, Karen, for starting with that. Pat, you also have a view from 2 different chairs, if you will. Can you talk a little bit about this and in terms of the information flow and what's germane or material and what is just good background?
So I agree totally with Karen's comments, and we all have ultimately iterated what comes to the board. I would just add to that that as you gain knowledge, what we did at both of our boards is I worked with their CHROs on a diversity dashboard as well. Given who our customer base is, we felt we had been at work on this for over 3 or 4 years now, and we were not making the kind of progress. So we developed a dashboard that I co-presented with our CHRO to the board, and we updated at every board meeting. And we also, because the data can get overwhelming, is we have a cover letter that has like green, yellow, red lights if there's any issues on any of the initiatives or where we're not making the kinds of progress. But we added that to everything that Karen just spoke about as well.
So it kind of brings up an area that I'll bet boards particularly we're going to continue to find interesting, particularly in this era of transparency. And to talk a little bit about the topic of executive compensation, Paul, you want to take us down that path?
Sure. Yeah, and Pat, you and I have experience on this together, which is you linking executive compensation to achieving certain goals when it comes to human capital. It can be part of your quantitative goals, part of your qualitative goals, but it can be a real challenge because there's only so much real estate sometimes in an exec comp program to devote to diversity, equity, inclusion, and so forth. So what are some of your suggestions for companies on how to link effectively executive compensation to your human capital?
I have in the past, as an executive, used both carrot and stick. And since I drove HR and DE&I at Time Warner, I do believe that people do what they get paid for. So after 3 years of being on that journey, we decided to tie it to executive compensation. And we took 10% of their personal performance bonus, which was 30% of their overall bonus. So by the time you get down to it, it's not overly meaningful in terms of their annual pay. We had one particular division where they were just not making the progress. And so the CEO and I decided to step outside the formula and use negative discretion. And so basically when we gave this person their annual bonus, we said, this would have been your bonus had you met the progress on, in this case, it was their diversity goals. However, we have cut your bonus by 1/3, so you lost this huge chunk of money because you are nowhere. We never had another issue in terms of them meeting their goals, but we did have to go outside the formula to get there ultimately.
That's a great and powerful story, and shows that, yeah, negative discretion. Besides setting goals, but so much of this can be the committee and management saying, no, you got to make more out of this than might have been baked in. And I think that's terrific. Karen, do you have thoughts about linking executive compensation to
I do, and I agree with everything Pat said, and just maybe a few other thoughts. I think, it's important that, as we said, the real estate on the scorecard can get pretty cluttered pretty quickly. But, certainly I think it's important that, boards think beyond, quarterly results and earnings per share, whereas that is still a big driver, and you include those qualitative measures to demonstrate that your company is professionally run. And what we did is we used our annual engagement survey to fund 10% of the pool. And then I think philosophically, you also have to decide, certainly at the executive comp level, is that more of a team approach, or, is it a bit of a dogfight at the top? And I've worked for both, and I do prefer, the team approach. But that said, it is very hard to put a performance distribution curve on your C-suite. And if that is forced, that your front-end revenue producers are always going to, get the lion's share of the pool. but there's an awful lot of support behind the scenes that helps them deliver on those results. But, I think in terms of more of that team-based approach that you win as a team and you lose as a team, there certainly is some individual discretion there. But relative TSR certainly is the gold standard nowadays. I think boards can measure smart risk-taking, the depth of the succession bench, certainly performance units. I think it's important that sales leaders also have a qualitative and a leadership component on their scorecards to make sure that they don't get a let for bad behavior regardless of their results. I think also some caps and collars as well to make sure that there isn't a windfall, but that there isn't a punitive situation with executives if there are situations beyond their control. And then there's probably one step further than that, making sure that your employment contracts and anything that's disclosed in the proxy, isn't super egregious.
No, all really, that's great broad context there on the multiple ways to link it. And I like the notion of thinking of things that are both individual and team oriented in terms of achieving these goals. So now let's talk earlier.
If I may, we've got a question here. I would like to maybe toss them out sort of as they start to come in. There's some energy here, Pat, around the story you just shared. And so I think your point is well taken. It doesn't take too many examples of that before people start to get a hint of mint. But here's the question that was raised to you by Monique. How do you ensure that you're encouraging and driving the right behaviors by executives when you tie it to compensation? Certainly, I think that story speaks volumes, but perhaps there were other things that you did as well to sort of drive that kind of, it's not compliance, let's just say acquiescence.
Yeah, so it was more of an issue of focus than it was about intent. So it wasn't that this leader didn't believe in it, want to do it, but they had a business that was facing some challenges, and this is just not where their focus was. I do agree with what Karen said about leading with your values, and so there were other ways to make sure that the right behaviors were met when they were driving some of these goals. So that was also a piece of their personal compensation. But I just think that it was more about where they were putting their focus, and that they needed to assign someone in their group, even their head of HR, to help manage the process of meeting some of these goals. I mean, what this person did was went back to her senior team and said, I am not losing 1/3 of my bonus next year. So what do we have to do? And it wasn't that she didn't believe in it. It was just a matter of, they were focused on other things. So.
And one thing, too, I recall, Pat, is part of the goals were sometimes individual goals were actually collaborative. To encourage collaboration, you actually had to help your fellow executives achieve their goals in certain areas. So that picks up on Karen's point. You can have it, you can make part of the executive compensation depend on how well they play with others, help others.
Time Warner was notoriously siloed, and so the CEO and I built that into all of the divisional CEO's goals, that a portion of it was going to be based on how they played if they played nicely with others.
Yeah, which is great. So thanks, Rebecca. And we'll take some more questions as they come in. But let's talk about strategy. Because one of the tricky things here is, as we're talking about making human capital management more of a strategic, taking more of a strategic approach at the board level, how does the board make sure that they're tying that they have a human capital management strategy, and that strategy is tied to the business strategy? And Pat, do you have thoughts on that?
Yeah, I think that given the move to a knowledge economy and digital transformation, that the tying human capital to business strategy has become imperative, and companies have seen that. Add to that the pandemic and the racial reckoning, and you understand how important, people are. They're your most important asset. You need to, in order to have a competitive advantage, make sure you're attracting, retaining, developing the right team. So just one story. So at Chipotle many years ago, before I was on the board, they faced a badly mangled issue of a few E. coli incidents. And they then developed for their team robust practices to minimize the possibility of this happening again. I mean, it's a restaurant. Things like that happen. But how could they minimize it? And it all revolved around their people. And the fact that fast casual was also in the midst of a digital transformation, how did they build up their digital team? How did that work with their frontline workers? And I would say it's the two main reasons that their value has increased during the pandemic. Their stock is at an all-time high because they had many of these issues and practices and policies in place, whether it was the safety of their employees and food safety, as well as being able to transition from 20% digital ordering to more than 80% digital ordering. So all of that was about people and their people strategy.
Yeah, and so part of that, it seems like what worked there is they saw people issues as business issues and vice versa. It wasn't sort of, because sometimes we've heard from folks that as soon as you tell your board, oh, well, this is a cyber risk, or this is human capital risk, or this is this sort of thing, boards can tune out. They can say, okay, well, there's a committee to deal with that. I'm not an expert on that. If you make it clear that these are real business issues, like digital transformation, health and safety, they involve their employees, that doesn't create that artificial distinction between human capital and business. Karen, do you have thoughts as well on how you actually link human capital strategy to business strategy?
Yeah, I think, I really don't have anything, else to add to that we haven't already talked about above or that, Pat touched on.
Okay, great. All right. I think back to you, Rebecca. This is kind of like when they had the dual anchors on the evening news.
There it is.
Over to you.
There you go. I should do sort of a, Carol Burnett thing, and you'll get it. But I wonder if we will reach a point where we begin to think about a business strategy which has a human capital strategy embedded in it. It's not a parallel track kind of thing, but rather it's the same way we would build a business strategy and think about risk, and we would think about our human capital. I mean, I wonder if someday we will reach nirvana with that, but it could be in my lifetime or soon thereafter. I'm not sure.
Just on, it's companies are facing that with sustainability. Like, do you have if you think of sustainability, what's in the long-term interest of the company and its stakeholders and society, shouldn't that be not a separate document, not a separate strategy, but built into your overall strategy as well? So I think, there's an opportunity for companies to expand what they typically include in their business strategies. I don't know, Pat and Karen, if you've got thoughts on that.
So I want to talk about culture for a little bit, because I think it's all, intricately part of this. But just before we shift there, we had a question that came in, and I'd ask either Karen or Pat about how you tie specific achievement of specific human capital metrics goals to enterprise level performance. Any thoughts on that?
Yeah, I mean, I think this probably, we'll probably touch on this a little bit more, but, I do think, things like your annual engagement survey are probably, your best tool, to measure culture and values, and that you're really looking for trends of how to get better over time, and making sure that, that's part of your overall pool funding, part of your overall incentive funding throughout the organization, and that it's not just an HR program, right? Like, everybody owns the engagement of their workforce and the results. And again, that's a little bit of a team sport, right? Like, if 5 units are great and 1 unit is horrible, well, you're kind of pulling down the whole team with those sorts of actions, right? Like you've got to make it in such a way that no one person can just conveniently opt out with no impact to the rest of the team or to the rest of the group.
Yeah, no, I couldn't agree more. Pat, any quick thoughts on that?
I think you're looking for specifics, and I don't know, other than the employee survey, how you actually tie those specifics to compensation and performance. As I said to you with Chipotle, the whole performance was based on how they dealt with their people. So, but it's not like we said, okay, that was 50% of the reason. I'm not sure I can add much to what Karen said.
But I'm sure that everyone's figuring out ways in which, depending on the organization they're in, to make sure that's at least a significant component to it, and that really leads us into the discussion now about culture. So you could argue that many of the, let's say, the unpleasant headlines that have been associated with companies that we shall not name, but many of those are the direct result of a failure of a culture that was either a speak-up culture or a culture where people did not feel there were ethical constraints or a variety of other things. And so getting the culture right is an increasingly important piece of, I think, the leadership team and what a board should be particularly interested in. So if you argue that your business strategy might be stellar, but everybody's got one, and the question is your organization able to execute better and more effectively because of the strength of your culture? And I'd argue that that's a case that could be made. And so when you think about now where employees have told us consistently through our research in this area and that of others, how important it is to work for an organization whose values align with their own, how important it is for them to have leaders that they respect. And increasingly, employees are telling us, we have some great new research that's just about to come out again this fall, where we want to know what employees think about their organization's responses, either internal or external, or perhaps both, to social change issues in that broader context. And what we know is that the vast majority of employees want their companies to respond. That puts a real onus on the organization to figure out what to respond to, how to respond, exactly how to position it, who's going to be the face of this response, that sort of thing. But it's that culture piece that's really hard to sort of get at. And if you're a member of a board, you're not involved in the day-to-day. You may or may not have a great deal of interaction with rank and file. You have short periods of time where you're focused on this, and it's not a daily thing. How can we ensure that boards understand the underlying culture of an organization and how that can enhance or augment the ability to deliver on the strategy? And I'd love your thoughts, and maybe Karen, could I go to you? How does a board get a sense of the corporate culture and then how that relates to executing against the business strategy?
Yeah, so I think it's several things. Again, as I talked about already, I do think your annual engagement survey is probably the best tool to manage your culture and your values, and boards should be looking for trends, and they should be looking for trends by the various different leaders. I think it's also important that it becomes a broader discussion at committee meetings. A lot of it, let's face it, is observation, but I think one of the most important things to demonstrate whether you're living your culture is to see what actions are taken if people don't live or role model the core values, in particular at the leadership level. So, we had 5 core values at TD Ameritrade, and I often said, look, some of these you can beg forgiveness on, others you cannot. And there is simply zero tolerance for some of those. And, all eyes are watching that, so you may, I'm making it up, you may have your top producing salesperson, but if management or the board turns a blind eye because how they do things and how they treat people doesn't get dealt with, that's going to create a very toxic culture. So I think those actions are critical. I think boards should be looking for things progress, right? Progress. Are the faces starting to change if we're really committed to diversity? I think, I think the board can see how the team interacts at board meetings, at committee meetings. And then I think what's evolving is boards are now starting to get involved in actual selection of C-suite executives. And I've seen that now happen in the last 3 or 4 years. So, for example, you need a new hire. Let's say you need a new chief risk officer. Is the chair of the risk committee and the other committee members actually getting involved in the selection process? The governance committee with the general counsel, the chair of the HR committee with the CHRO. And I think also making sure that the board is involved in pay practice, or the chair of the HR committee is involved in setting the pay practices, the contract parameters, and also making sure that the board did in fact do some interviews as part of these new hires. I think a lot of it is observational, but there are some actions that they can take to help.
And Karen, just before we go to Pat, I've got a question here about, you talk about the board's involvement in hiring.
Yep.
What's being done about ensuring that there's diverse representation on the board, in the C-suite, in critical positions? And perhaps your thoughts, and then we'll ask Pat to weigh in.
Yeah, I mean, I think that's still, evolving as well, but like with anything else, you need to have a diverse candidate slate. And so whether you're working with external search firms, I know when I went to a search, that was, one of the first criteria, and you have to hold yourself accountable, and boards have to say, well, where are my diverse candidates? Why am I only seeing, a slate of white males, et cetera? So I think that it starts there.
So I would love to just add a little bit to this. So I don't think we're still in the middle of diversity being a focus. I think we are full on. There's a lot of pressure from investors. We got a call from an investor at one of our companies where we just put a woman in to lead their merchandising effort. And they said to the CEO, kudos to you, you diversified your team. So there is a lot of pressure, both for the team, the senior team, as well as the board. You also have millennial pressure. So when you talk about the workforce and what they demand and the culture and the mission and purpose, they are very, very vocal about it. And then one more thing, and then I want to get into what we were talking about. When you talked about the pressure on CEOs to speak out, one of the things we found at Coquel was for those companies that didn't walk and talk their values, if they made an external statement, it actually hurt them more if it was against what they're driving internally. But back to getting a sense of the corporate culture, one of the things we've seen since Me Too, boards were demanding culture audits. And that is something that we have done with many Fortune 500 companies because they wanted to get further insights into what actually was happening. So there are things that you can see through the employee survey, but we have something that's an anonymized tool that's an anonymized focus group. And so you can dig in further. If you get that answer to the question, you can then dig in further and you can find out, yes, in the Chicago office, there are huge issues. Yes, you can find some of that out from the employee survey, but it really depends, are they being honest? One of the companies that I was at, their senior executive had an anger management issue. No one complained, wasn't on the employee survey. It wasn't until there was a very visible event, and the company kept on saying, no, we know our culture. And I was like, how well do you know the culture if you have a senior manager and people are afraid to tell you? So they then embarked on a culture audit. I personally think that that is a way to get much deeper knowledge about what's happening in your culture.
Yeah, I think you raise an important point. Simply to speak out on an issue, it should be a very carefully thought out process. I don't want to take us too far down this process, but you know, you cannot say one thing and then have your employees go on Glassdoor or through any other medium and share exactly how much that is simply window dressing. So
Yeah.
now I'm conscious of the time, and I would like to order food and have it delivered to separate places and continue this, but we're going to go into lightning rounds and just some quick thoughts here. And Paul, if you wouldn't mind taking us through the first one.
Sure, we'll do. And by the way, that was really helpful. I think where we just came with culture, which is tricky to get your hand on as a board, is it's not just employee surveys, right, which are helpful, but it's new tools. And Karen, it's the being involved in the selection of senior management, and Pat, it's the culture audits. So I think this is really helpful for people watching. Okay, so first lightning round question, and it goes a bit to composition, but in a different way. Given the evolving role of boards, particularly with respect to human capital, what do you think about having executives with human resources experience on boards, and what can boards do generally to up their knowledge level in the area of human capital? Karen, maybe start with you and then over to Pat.
Yeah, I mean, I think historically it's been a harder sell, but when you look at the emerging risks, they all seem to be very people-related. So I think having somebody on a board who understands and is versed in some of the topics around social unrest, DEI, retention of top talent, culture, health and safety is probably a smart move.
I totally agree with that, and I'm probably biased since I have both a business and an HR background. But that was a big selling point for my getting on my boards, that I had both. And both of my boards, we have HR expertise. I think it's really important in these times.
Honestly, I can't imagine how boards are going to be successful without looking for that. And it's going to have the knock-on effect of diversifying and expanding the pool of possible candidates for board seats. So I think that's going to be where it takes us. So failing that, or until that day happens, how do you help board members feel more comfortable with human capital management? What have you perhaps seen or witnessed or actually delivered or been involved in? Karen or Pat, either one?
You go ahead, Pat.
Go ahead, Karen. Karen, go ahead.
Okay. Yeah, I mean, I would say that certainly it helps if you have an enlightened HR committee chair. And but I also think giving the full board access to all of the HR committee documents is helpful. And you know, I mean, in prior years, you know, the board books for the HR committee were very secretive, and only the committee members got to see them. But I think, you know, now with, you know, some tools like Board Vantage, you can restrict all of that. I think it's important that the full committee sees that. I can't remember the last time I actually walked in a document. I think, you know, making sure that human capital issues are part of the CEO's general update to the board, and it's not just around, you know, financial and EPS and market share, et cetera. And what I found really quite helpful was new director orientation, whether it was a new director coming in, brand new director coming into the HR committee, or you know, an existing board member joining the committee, really getting them up to speed on you know, on the engagement results, on the talent plan, and some of, you know, these other more qualitative issues that we were dealing with. Because the comp stuff, they can figure that out pretty quickly in the first meeting.
Thanks, Karen. Pat, lightning round response?
Yeah, so both of the CHROs at the two boards that I am on are women, and I've personally taken a hand in mentoring them and prepping them for their board presentations. I also do that with one of the CDOs. And it helps when, you know, I can back them up in a meeting and help further the conversation. One of the things that I insisted upon, we were doing full diversity training after racial reckoning around anti-bias training, and I asked if we could start at the board level so we could model that behavior down through the organization. So I find that given my knowledge and my background, that I can be much more active and help the rest of the board.
I know we're getting a lot of questions here about how do I position myself to get on a board and how do we do that, and I'm sure that's a question we could have a whole nother webcast on. But yeah. Can I just leave maybe that there and maybe try to bring this to closure with a piece of advice that you'd give to boards as they think about their role with human capital management, and you know, what advice would you have for them in closing? And Paul, I'm going to come to you as well at the end. So Karen, would you like to start?
Yeah, I mean, I think, you know, boards, you know, if they demonstrate, you know, patience and interest in really starting to understand some of these softer issues that are often sometimes uncomfortable. I think it's important that boards get to know the management team beyond the CEO, and that the chairs get to know their not only their management lead, but also some of their teams as well that do a lot of the work. I think that gives them an insight into how the team operates and how people lead. And then I think also getting committee member input beyond the CEO's performance to help set the incentives. So for example, the HR chair, you know, has input into the CHRO's compensation, and the risk committee chair into the CRO, and you know, the audit committee chair into you know, the general auditor, etc.
Great. Yeah,
I would agree with all that, and I would just add that as a board, you should really require a culture audit so you get a better feel for exactly what's going on in their organization, and so you can get ahead of the game if there are any issues.
Thank you. Paul, your thoughts?
Yeah, I think one of the most important things you can do as a board now is to get a consensus on the board that human capital matters, to understand where people intersect with your business, which is kind of everywhere, and to understand what the board's levers are in driving human capital performance and business performance. Because I think you've got to make sure that your board is on board with taking human capital seriously, not just in a sporadic or situational way, but in a strategic way. And that's going to take leadership by your CEO and by your members, maybe your lead independent director, chair of the comp committee, others, to sort of achieve that consensus. So I think that's important, so that this becomes permanent and it's not just a passing fad, which it shouldn't be.
Right, and I think that's so right. I mean, all of the comments that have been made about the importance of this is, I think, exactly on point. You can have all the strategies you want and all the plans, and if you don't have the leadership and the culture and the organizational ability to execute it, it's a lovely plan, and it'll be shelved, you know, with the next year. So we're going to have to close here. I want to thank Karen and Pat for sharing insights and experiences that have just made this a really rich webcast. And of course, it's always a pleasure to partner with Paul on a variety of issues where our worlds intersect. And I want to just also say that if you enjoyed today's conversation, I would encourage you to come to part 2, which is December 8th. And we're going to hone in on disclosure and some of the new regulatory guidelines. And I think you'll be pleased to see some of the work that we've done, the toolkit that we have for members, and the ways in which we want to support the profession through this. So please plan to join us for that one. And there's a couple of others that may be of interest to you. As you see here, we have a wonderful one on global comp and Ben, and it's all about executive comp in a time of crisis. When you think about where the energy is in our profession, there's an awful lot of it in the comp space, because that's a world that has been turned on its ear just ever so slightly. And so we've got some really terrific people to come in and speak to, yet again, Paul, on this one coming up later in December. And finally, this third one I'll mention is about our final Human Capital Watch of the year of 2020, about a human-centric and inclusive approach to work wherever it happens. And you'll see some of the terrific folks that we have who are going to be joining, and I hope you'll find time for that. And I know she's on the line. I just want to do a shout out to Dr. Solange Shiraz, who's been the lead writer on this joint project that we've had. She's been absolutely terrific. She's a distinguished principal research fellow here at the Conference Board and university professor, as well as Dr. Amy Abel, who is our head of human capital research. So it's been a great team, and so we appreciate that very much. So I would be remiss if I didn't ask you to be sure to come and check out the podcast series that we have. I've really discovered these in recent years and I enjoyed doing them. I love listening to them, and I hope you'll know there's a whole group of them coming out under human capital that I think you'll enjoy. And finally, I'm on the hook for everything here in Human Capital at the Conference Board. So if you have a suggestion, if we could be better, if we can stop doing something that's annoying, I hope you'll let me know. It's a very short evaluation at the end of this. I hope you'll remain just for a moment and share. But I want to thank everyone for joining. I want to thank folks for attending, but I especially want to thank Karen and Pat for your wisdom today. And thank you very, very much. We'll hope to see you again soon. Thanks, everyone.
Thank you.